Nela, good morning.
Good morning.
Let's start with jobless claims. 227, just continued resilience, which is a theme that you keep going back to repeatedly. What underpins that resilience at the moment?
Well, the labor market, if you look at it in a snapshot, is really, really stable. Companies are keeping their workforce. They're not letting them go. That's why we see such low initial jobless claims, and workers are by and large staying put. So the snapshot of the U.S. labor market is solid. The problem is if you look at the labor market in motion, the churn is gone. People are not leaving. Firms are not hiring in mass. And so you don't see the dynamism that has defined not only the labor market, but productivity growth. And if you really want to look for the crack in the labor market, go back to the last measure of labor market productivity. Output per worker was down 1.4% year over year. That's a sign of the drag that's going on right now.
When you see a low churn dynamic like the one you described start to grip the labor market, typically when you look back, how long is that sustained before things break one way or the other?
I don't think we can go back to priors. I mean, if I look at the great financial crisis, for example, the unemployment rate was above 7% for several years. Now, we're not even at the starting point of that great financial crisis. We're at 4.2%. The unemployment rate has been remarkably stable. And I think that's because there's so many demographics that are shaping that rate. Lots of retirees, a slowdown in immigration. There's going to be labor shortages that are persistent. So it's hard to really capture the labor market in one number, harder than it has been in the past.
When you think about immigration policy, do you see the unemployment rate actually going down?
I don't see that, actually. I actually see those shortages in certain pockets of the labor market. What's interesting about this labor market versus 2022 or 2023 is that there are no superheroes. We could rely on leisure and hospitality to be the stalwart in the labor market, or healthcare more recently. We're not seeing that now. So who's going to save the day and bolster jobs into the future? Well, there's no sector that's doing that. Immigration is actually the lack of the labor supply is likely to keep wages very tight and robust, which is a problem for the Fed, who's looking to bring inflation down.
If there was to be a superhero, though, wouldn't it be AI and the supply chains around that, these data center build-outs?
You know, that is a long-term play. I do think that AI increases what contributes to American exceptionalism, which is productivity growth. And so if AI can make workers more productive, then there is a chance that we grow our way out of some of these problems. But the problem is, it's not just the technology, it's the people. And right now there's a gap between the two. Is the technology hitting the workforce in a way that increases labor productivity? We have yet to see that.